oh, so much bad news, right? It's like, it's just terrible news. So at the end of the day, you're going to hear there's going to be two different, there's always two things. You're going to hear bad news, and those are bad situations. But it's also important to have a relative perspective of things, right? Make no mistake, look at the amount of growth that those companies had in terms of employee base versus a few years ago. They're still net way more, right? People fail to understand that. They grew way too fast. It is okay to grow too fast, right? Yes, the cuts hurt, but the cuts are needed for the company to continue to thrive and do well. Now, it obviously sucks for those people that got impacted, but make no mistake, it was probably overdone to begin with. So that is important for everyone else that is still working or still has a fear of their job. I tell everybody this, and I always tell people this. If you are at a company that is going through turmoil and is going through distress, you shouldn't be buying. Don't buy. What you should do, though, is you should also be cutting on all your expenses, right? You should be ready for a rainy day. So you should be cutting all expenses. It means don't live in that $4,000 to $6,000 apartment. That's just crazy. Go share a room or live in a room in a house to save that money, right? Don't just be, oh, I'm just gonna not buy a house. I'm just gonna be super frugal on this end, but still spend money like no other than before. Like, figure out ways to save money and to cut your expenses if that is the game plan that you want to do. On the other end, to be fair, because of this situation that's happening, this also presents opportunities for others that are still in jobs that are fine. Like, make no mistake, there's still 83% or 87% of people still have Meta. That's still 80,000 plus employees. Google still has 100,000 plus employees, right? Apple still has 100,000 plus employees. Like, they still have huge people and huge personnel that are still working, still getting paid well, still getting RSUs. Apple is still having a big corporate party this year. So, like, the reality is, yes, there's distress out there, but distress presents opportunities because a lot of people will be gravitating towards that fear, and they're going to be keeping that eye off the ball. Because look at this. Mortgage rates fall sharply to under 7% after inflation eases. The average rate on the 30-year fixed plunged 60 basis points from 7.22% to 6.62% because the inflation print of this month was much less than expected. And so because it's much less than expected, you saw a very big bull run in the stock market. You saw a lot of people buy back into bonds, which had lowered the yields. And so this has been a huge change. So if you're in contract, definitely talk to your lender to try to get this adjusted, because this should be a pretty meaningful impact. But if you're an outside buyer that's planning to buy, or is planning to always buy right now anyways, like, take advantage of this downturn right now. And yes, over time, there may be further decreases in rates, but you should take advantage of something like this, because this is like a very, very impactful thing. I mean, 60 basis points, like, what is that worth to you? Depending on your loan size, it could easily be at least a couple $100 a month. So it's a pretty substantial move. And so you see these different things happening, right? Because on one end, the whole reason of the increase of rates is to cool down inflation. And make no mistake, the whole objective of that is job losses need to happen. But if you're in a company and you're still working and you're still doing well, and many of you are definitely doing very well, then you can use this as an opportunity to be able to buy back in or to enter in the market, because that's just how the dynamics works, right? And make no mistake, transactions are still happening. So it's not like things are static. There's still a lot of transactions happening. Good homes, as you may evidently see, are still selling each week. So it's just a way to understand, like, this is just how it works. It's unfortunate for some people that are impacted. At the other end, it presents opportunities because there's just less competition. If everybody was in full employment, you had things like what we had before, which is either high inflation or a really, really competitive housing market. So those are all very, very important things to remember and consider when making the move. And I suspect this winter, now if you pair with lower rates, I think we're going to have some pretty interesting opportunities that we will see here. Thank you for watching this short on my YouTube channel. For more shorts, go ahead and click here. For more live streams, you can go ahead and click here. I'll see you in the next one.